Happy Thursday to you from the floor of the CME here in Chicago. I'm Oliver Slope with Blue Line Futures with your grain market update. And as you can guess by the tie, it is a USDA day. We finally saw some volatility come back into the market after the release of that data. Let's start looking at the corn contract. December is the month of focus for a lot of traders down here on the floor. We got a bearish report, but the market went higher, and I think a lot of this was on the back of short covering. We know that funds have established a relatively good size net short, and so we saw some short covering into that on the back of strength from soybeans. 171.8 was the yield estimate, with production right at about 14.2 billion bushels. Now, speaking of the bean market, beans are the main driver here in this afternoon's grain trade, as the yield expectations were lowered slightly, 49.5 bushels an acre. This is kind of towards the low end of estimates. We broke out above technical resistance that was at 977. That's going to become support. If we can continue to close above this to round out the week, I think there's more upside here. A close above 993.5 really opens the door towards 1014. Now, as far as the wheat's concerned, kind of a little bit more dead. It can't really get any legs. Started out a little bit higher after the report, but saw the sellers come in and take advantage of a little bit of spillover momentum to the upside. Buy wheat, live in the street is what a lot of traders have been joking around for the past several months, and we're seeing that play out again. A failure to get out above the 50-day moving average at 447 3/4 keeps the bears in control, and looking for contract lows probably tested in the near future if we can't close above that. It comes in at about 422.5. So that's what we're looking at to round out the week. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.